Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal, ladies and gentlemen. I'm Hiral Dadia. We have with us Dr. Virendra Chauhan, Head APAC Energy Aspects, joining us. Virendra, welcome to the show, and it's always a pleasure to speak to you. Virendra, my first question coming to you over here is everyone's still wondering what's happening with crude. The way it's rising right now, we've already crossed that $70 per barrel mark. We hit that number. Do you think this is going to be the trend from here on? What are the reasons that you're picking up to see this kind of a move?
Yeah, I think there's a few drivers, both on the supply side and demand side. Let's start with supply first. I think the reason why we've rallied so much is because unlike this time last year, where there was an all-out oil price war between Saudi Arabia and Russia, and then we had the world going into lockdown, what we've had this year is extreme caution from key producers such as Saudi Arabia. So they voluntarily took 1 million barrels per day off the line across February and March. And then at the latest OPEC meeting, which was just a few weeks ago, they decided to keep production in check by another 1 million barrels per day across April. And their aim or target, we think, is they are defenders of $60 oil. And they're also very, very cognizant of the kind of tentative demand situation. So we are seeing, phases of demand weakness, whether it be lockdowns or whether it's high oil prices like in the Indian economy, which is leading to a slowdown in demand.
Right. So with that, clearly if you go to see, you have OPEC, which has come out and said that they are looking to extend its output curbs into April, and a small exemption has been granted to Russia as well as Kazakhstan. Was this something that you were expecting already?
Yeah, I mean, we did it. We didn't expect, Russia, Saudi Arabia, who are the key kind of de facto leaders of the OPEC and non-OPEC group, respectively, to go into an all-out oil price war, given how badly producer economies, well, the global economy was damaged by this COVID-19 pandemic. So we did expect caution, but we didn't expect Saudi to roll over 1 million barrels per day. But what I do think is happening here is Saudi Arabia is preempting the return of Iranian barrels to the market. So the way they were thinking about it is, let's overheat the oil price now to a certain extent, because we could see some weakness in the second half of the year if and when the US administration lifts sanctions on Iran and Iranian volumes still start coming back. And if the global economy is still slowly recovering from as more and more of the population is vaccinated, then of course they want to be cautious in phasing that production and the balance of supply and demand onto the market.
Right. So with that, clearly if you go to see the way the OPEC is moving from here on, it appears that they are believing that probably US oil production will struggle to respond to the higher price environment in the near term, particularly after the damage that has been caused by the recent wintry snap. Do you think that's something which could happen?
So what's that? US production coming back, or you think
where US production will struggle to respond to the higher price environment in the near term?
Yeah, so I mean, effectively, the way we look at US production is it's a function of investment and capital spending. And if you look at capital spending, despite us being in a $60 oil price environment, whichever US producer you're looking at, they're exercising extreme caution. And until you see that kind of narrative change, we think US production is not going to come roaring back. And that is, OPEC is measuring that kind of activity level in the US very, very closely.
Right. So do you think that OPEC Plus will be able to push prices even higher without the risk of losing market share?
I think there's different dynamics in place, because if you think about Saudi Arabia, for example, it's a revenue maximizer, i.e. it's exports multiplied by price. And if you do that calculation, they are currently, in the current oil price environment, they are generating somewhere close to $12 billion a month in revenue. And that's similar to the levels in 2019. The key difference is they're producing 1 million barrels per day less. So that's the Saudi approach. Now, Russia, as you mentioned earlier, they are a market share maximization approach. And for them, they would be more comfortable with oil in a $40 to $50 oil price environment because it keeps the US producers on edge, and it also allows them to grow market share in key markets, whether it's India, whether it's China, or whether it's elsewhere in Southeast Asia or even Europe, for example. And so they're the kind of there's a subtle difference between the approach of the two leaders of that kind of group.
Right. And Virendra, with this, if you see the US crude inventories as well, the latest data which did come in, we've seen a large jump on that front. And this is clearly in the aftermath of last month's Texas winter storm.
Yeah.
What is this data actually indicating to us right now? And going ahead, what is your anticipation?
Yeah, so the US, you're right in saying that there's a specific dynamic within the US. So what happened was the refinery shut, so demand shut down. Production also shut, but production came back a lot quicker. So you had an imbalance whereby demand was late in coming back, and therefore they were not able to put that crude anywhere, and therefore it had to go into storage, and then inventories on the US Gulf Coast went up. But if you look at inventory levels in the rest of the world, you are seeing them normalizing. And one of the key targets for the OPEC plus group is to normalize inventories globally, or OECD inventories, because that's the most visible inventory base in the market, back to the 2015 to 2019 average. And we're still we're a long way through that process, but there's still some way to go. And given the tentative demand situation and the global economy effectively still being in intensive care, they obviously want to take a very precautious approach.
Right. And with this, if you have to talk on the demand side as well, what would you have to say with regards to China's energy demand? Because it's seeming that that's something which is really picking up. And do you think that will then provide support to crude prices?
Yeah, I mean, China is key. It depends very much on the timescales. If you're talking the next 3 to 6, 12 months out, absolutely, China matters. And then if you're looking longer term, and that's where countries like India are rapidly moving up the curve, and therefore per capita consumption goes up. And that's the kind of key or tricky balancing act that various producers around the world have to do. They know that India, they know that China are very, very price sensitive. They know that if they push prices too high, then they're going to shoot themselves in the foot, or as I think Modi put it, you're killing the goose with the golden eggs.
And Virendra, with this, another aspect that we are tracking from here on is the Federal Reserve. They will be meeting for the first time since the time the yields have exploded higher and the Biden stimulus has become a law. What is the kind of output are you expecting on that front, and how do you think it will impact crude and the commodity market as a whole?
Yeah, I think commodities and oil in general has really benefited from this so-called reflation trade, the reopening of the economy. And one of the key drivers of that is not just physical traders that move oil from one place to another, but also a lot of passive money inflow. And with the with the crude curve in backwardation, you're yielding good yields by just rolling positions on a month-on-month basis. And so that's attracted a lot of passive money into the market. So if you look at the Brent forward curve, 1 to 6 months out, you're somewhere between 60 and 70 cents backwardated. So every month, if you're a passive investor and you just hold your position from 1 month to the next, the positive roll yield will be generating good returns, even in an environment where the oil price does not necessarily go up significantly. And our base case expectation is that we'd kind of expect prices to normalize around these levels.
Okay. And then with this, do you think the Fed could probably come out and give out some signal next week that it won't allow financial conditions to tighten much further, on the back of which you could see the greenback, which could take a plunge? And if that happens, then how do you see crude moving in turn?
Well, there's two factors driving the price of oil, right? The first one is the macro factors, and the macro factors have certainly helped push the oil price to where it is. And then there's also components like the US dollar, stimulus measures, monetary easing, et cetera, and then there's the supply and demand. So the supply and demand is still tentative for reasons we've already discussed. And then on the macro side, of course, the US dollar, the general correlation is when the dollar goes down, the oil price goes up. But I think a lot of that is priced in already. And so I wouldn't expect, based on any Federal Reserve decision on interest rates, for there to be a large impact on the oil price from here, because I think ultimately what the market has done is already priced in those recovery trades. So the population being vaccinated and oil demand coming back. So now it's a case of, okay, we've priced that in. Now we actually want to see a recovery in demand. And if you see what happened in the February statistics for India, for example, the oil prices got high and gasoline demand immediately came off, hit a 5 or 6 month low. And so these are the kind of signals that various participants in the market will be looking at to assess where next. And for us, we think that there's a period of consolidation in the oil price now before we see any significant rally.
Right. But do you think there is a case for crude to get back to $100 a barrel and probably on the path to highs, which we probably have not seen since 2014?
I mean, I wouldn't rule out oil going to $100 per barrel. We saw, the impact on the Ras Tanura facilities in Saudi Arabia leading to a spike in the oil price last week. But then when there was a realization that it didn't actually impact any facilities, it didn't impact any export or any supply to the market, then, the steam was taken out of those oil prices. The question is, if when you're in a normalizing oil inventory environment like we are now, at the moment, the world sits on a spare capacity buffer, but I think only when that spare capacity buffer is eroded, so whether it's Saudi producing at max again, Russia producing at max again, and then you get these geopolitically induced outages, that's when you could see a spike in the oil price. But we think that's a 2022, 2023 story more than a 21 story. I think 21 is still a recovery year for oil after the bloodbath of 2020.
Right. And very lastly, Virendra, what's your view coming in with regards to where natural gas goes? Because clearly, we are seeing that somewhat of downtick that's coming in on natural gas after forecasts have called for a milder weather and lower demand through late March than what was previously expected. Do you think natural gas production also will decrease? Or do you think it's only the demand that will decrease, and that's something, and the production will continue, and that's something which is going to put pressure on natural gas prices from here on?
Yeah, I think natural gas is certainly in a more tentative situation as far as the kind of balance between supply and demand is concerned. Of course, there is a lot more seasonality in demand given it feeds into the power and the heating sectors. And obviously we had this polar vortex in the US and across many other, also in Asia. But I think the kind of medium-term outlook is more constructive for gas than, say, if you were to compare to the last 5 years. But I do think that the supply will keep coming on the gas side. But on the oil side, there is a question of, does US shale come back like it did in the period between 2010 and 2020? And if you ask us, that's not the case.
Absolutely. I think it's just a wait and watch moment that we have to watch out for. Thank you, Virendra, so much for joining us on the show. Pleasure to speak to you as always. Thank you and stay safe.
Thank you.